Bitcoin Undead. Trying to play into that Friday the 13th Halloween theme, I suppose. Actually, let's go back one more slide. We'll talk about what we're going to cover very quickly. So what I want to look at right now is just where we are in terms of a cycle. If in fact the low is in, what's happened last time? What might we expect? Where are we in terms of returns? And then we have halving that's upcoming, where the reward for miners for verifying and securing the network gets cut in half. And this typically happens every 4 years. This is programmed into the code. The estimated month that this is going to occur is sometime in April in terms of the block at which the reward would be cut in half. So I want to look at how that might impact Bitcoin performance following this event. And typically, it's viewed as bullish because you're seeing the rate of change of the supply issuance decline. So you have a bit of a kind of a disinflation that occurs in terms of supply issuance. There's also some tailwinds that are setting up. I know we've talked about ETF flows before. I want to look at interest rates, but also want to just point out that a lot of these things are all kind of lining up to occur right around the same time. So you do have this setup that's kind of interesting. And then something else we haven't really talked about too much is on-chain activity. Given the transparency of the Bitcoin network, of blockchain networks, we can look at what's happening on-chain. And so there's the potential for a bullish supply shock. And I'll talk about that in just a second. But let's jump to the next slide. And I just want to take a look at, for context, kind of where we're at and get your guys' thoughts as well. Do you think the lows are in? At times, this has been highly correlated to equity prices. It's correlated inversely at times to financial conditions. So curious if, and I think we got to jump ahead a couple slides here. It'll be slide 5 in the deck. But we'll look at the cycle. Back one slide. There we go. Cool. So what we're looking at here is just that cycle or that range from the low after putting in a new high. So we don't have a ton of data really prior 2010. But what this again is looking at is just that, I think 2018 is probably a good example. So you had this huge run up in Bitcoin. I don't know where it ends up peaking, let's say 20,000 or so. Falls all the way back down to 3,000. And then how long did it take until we reached or broke through that new, that previous all-time high and hit a new all-time high? What did the return look like from the lows there? So you could see, obviously, as this has increased, the nominal value or the dollar value here has increased, your returns have been minimized. So the first cycle, 15x, 5x, 5x, 2x. Right now, if we look at where we are, if in fact the low has been put in at about 16,000, then we're up about 2x, not quite, but trading closer to that in terms of where we hit that 30,000 high recently. And that's been 328 days since that low has been put in. So just for context, this is kind of what we've seen from a cyclical perspective. On the long end, we're looking at bear markets that until you hit a new all-time high, if in fact we do this time around, tend to last upwards towards 2 years. That said, do you guys think, given the macro environment, how risk assets are trading, everything that's in play right now, do you think that the low is in Bitcoin at 16?
Oof. I hate to predict lows.
Yeah.
Yeah, I don't really think of Bitcoin that way, but I mean, there was no doubt when it was trading down there that it was really interesting to us, but you have no idea if it's going back to, 5 or 10 or, going to stop right there. I thought that we kept saying for a long time, we like that 15 to 18 range. So we nibbled there for sure.
Now we're 26,000. I mean, I can't play for that. You know what I mean?
Yeah.
Yeah.
We don't, you know what, Ryan, I don't think, again, the reason I don't like this type of conversation with respect to Bitcoin is because if an underlying, it's almost like saying, like, let's say you own your own house, right? Like, who cares where it's traded? Because it's not something you can trade. There's nothing you can do against it, and there's nothing you can't lower your basis because there's no liquid products, and you can't really, you're not going to sell it out and buy it back or some things like that. It's essentially, it's not that Bitcoin is dead. It's just that it's a dead asset right now.
Right.
So in order for Bitcoin or any other digital asset to become interesting, okay, it has to have the characteristics around liquidity that make things interesting. Like we can't artificially create interest in an asset class that doesn't have leverage and doesn't have derivatives, because then you're just talking about, speculating.
Price.
What?
You're just talking about price.
Yeah, but you're talking about speculating with dead money, meaning you can't do anything else with the money. There's no, money on money in that sense it's like real estate. So then it needs a purpose. So I think the more interesting story is not about what do you think price is going to do with respect to digital assets? It's like, where's this marketplace going? How do I position myself for whatever I think is going to play out in the future? Not whether this is a bear market or a trading low or a cyclical low. It's like, how do I position myself? How do I position myself to use these assets or products or whatever it is going forward? Like, what's my best use? What's my best use case, for this underlying asset?
Yeah, well, I think in terms of Bitcoin, it's the store of value. It's the idea that there's that asymmetric upside given it's still early. Beyond that, I don't think there's a lot of reason to hold Bitcoin, right? Unless you believe that it is a store of value or that the price is going to go up. So I think to put just some context around it, because sometimes it's hard, big numbers, 26,000. How do I think about that? Maybe looking at the cycle kind of can help to provide some perspective. But that said, I mean, if you're looking at this for upside speculative purposes, the setup to me here is kind of interesting, and it might take a little bit longer to play out, obviously, and we'll get into the rate factor in a second. But we have the halving that's upcoming here, so the supply issuance is going to decline. That could be, or the rate of that supply issuance is going to get cut in half. That could be a potential catalyst. If we jump to the next slide, this is expected to occur, like I said earlier, in April. So I want to just quickly look at what's happened the past couple of times. This is from Cointelegraph. So we've had 3 halvings before since Bitcoin came to existence. You can see that it's gotten cut down quite a bit from where it initially was at 50 Bitcoin in terms of the block, the reward there. And so we're at 6.25 right now. We'll get cut down closer to 3. You can see what the price was on those prior halving days at which that occurred, and then just looking at this kind of arbitrarily 150 days later, where was the price? I suppose we could pick any time frame, and we're going to get different prices, obviously. But it has generally been bullish. We have seen prices rise here following the halving. We'll see if that happens. If we jump to the next slide, we've got a little bit of a longer time frame, and this is coming from Econometrics. And what this is looking at is just really how did that perform, how did Bitcoin perform over the 4 years up until the next halving. And so again, much easier for something that's 50 cents or $1, $2, whatever, to go up quite a bit relative to 26,000 in terms of the amount of capital involved. But you can see that those returns have come down a little bit, but still generally bullish, 1 year post halving. And then you can see where we are, 3 years into the most recent halving, with the next one upcoming in April. So a little bit of an interesting setup there for anybody that wants some context around how this has performed historically. There have been 3 halvings, not a ton of data, but something to go off of. If we jump to the next slide, I think what's interesting about this, and my point is that while, yes, there's nothing happening right now, vol is on the floor, a lot of things are kind of setting up that could all hit right around the same time. Which, again, doesn't mean the price is going to go up, but I think for anybody to get interested in this again, price has to kind of lead. And so what could drive price higher? While we've seen these deadlines get pushed out by the SEC around a decision for an ETF approval, they have to be approved at some point. And so the SEC has used its ability to extend that deadline, and that takes us out to 240 days from when the initial filing occurred. Most analysts and people that look at this, and there's a lot of people that are very positive. There's some news that came out recently where the SEC is having some conversations quietly with these issuers, and it seems like this is something that's going to happen. But the earliest we could see this would be January 24, and that's the ARK Bitcoin ETF. And then the rest of these, the latest would really be March of 2024. So you have ETF approvals setting up where you would have significant capital flows. I think it's really hard to argue that this wouldn't be bullish for the price of Bitcoin. That's setting up right around the same time that you get the rate of change of the supply issuance cut in half, typically has been bullish. But I think the most important thing, and I'm curious as to your views on this too, because we haven't really gotten into the why behind Bitcoin's dead. But I think the most important thing is Fed funds. I mean, it's rates. Mm-hmm. At 5.5%, I don't care if it's Bitcoin or it's any other asset, there's less of an incentive when the risk-free rate is at 5% to go out further on that risk curve. And as we know, Bitcoin's pretty far out on that curve. And so I think when you just look at what the market's starting to price in, and I haven't seen the update since the inflation print this morning, but the market is, and this could be pushed out further, as you know, or it could get pulled forward. But we're starting to price in the potential for cuts sometime mid-2024. The point of all of this is that I think one of the biggest factors that we don't talk about too much, which is that macro environment, which is rates. You might see a different environment right around the same time that the ETFs are approved, that the halving occurs as well. So there's this setup there. Obviously doesn't mean that it can't go lower first, but it has been the best performing asset year to date and really over the last year as well, even though it's been asleep. It's just crushed everything else. So there's a weird narrative in the market that is kind of counter to what's actually been happening, I think. And that's just because it hasn't gone up as much as it typically goes up. We're just in a little bit of a down year. And so the last thing I want to kind of focus on, because this is really important too, as it pertains to this setup, are people positioning for this? What's actually happening on chain? If we jump to the next slide, you have extremely illiquid conditions in the market as a function of investor behavior, right? People are hodling, holding on for dear life. They're holders here. And so when we look at what's actually happening on chain, people are stacking Bitcoin. So in the event that you do see some of these catalysts transpire and people get excited about it for whatever reason, it's extremely illiquid, and that vol will likely, I think, again, explode to the upside as it has. So the amount of what we'll refer to, and this comes from Glassnode, they do a ton of great work on on-chain analytics, but the amount of the long-term holder supply is at 14.8, almost 14.9 million Bitcoin. This is 76% of circulating supply. So what do we mean by long-term holders? This is Bitcoin that hasn't transacted on chain in the past 5 months. To your point, Tom, this is dead money. This is that Bitcoin that's asleep. Coins just simply aren't moving. And you're seeing this kind of get stacked at 50,000 BTC per month, which is being vaulted by long-term holders. So just being held. So I think that's interesting in that you have this setup. If you jump to the next slide, you can kind of see where we are, how we've climbed in terms of that percentage of circulating supply over time. And so you have this interesting setup where I think, while volatility has fallen as the market's grown, you have the halving that's going to reduce the rate of supply. It's generally been bullish. You've got a lot of these catalysts that all kind of are setting up at the same time. And I think the important thing here, and you see this quite a bit with Bitcoin, and certainly in other asset classes, but really it's quite prevalent when you look at crypto, is that markets are reflexive, right? It's that self-fulfilling prophecy at times. It's sometimes why technical analysis works, because if everybody believes it and acts on it, then it tends to kind of play out. And I think you might see something very similar here, because this is the view in this market, that the halving is bullish, that these things are setting up, and whether they actually are or not, I don't think matters, because investor behavior, is going to dictate price.
Does not?
Is having, I have a question. So that it reduces the pay you get, it cuts in half the amount that you get paid for mining, right?
That's right. Yeah. So the reward will go from 6 Bitcoin to 3 and 3.125.
Okay. So the argument you're making is that when that happens, that will reduce. Like, why would anybody mine then, right? Is that the point?
No, it's just that you're going to see less supply issuance. So the money supply, the inflationary dynamic, it's somewhat decreased, I suppose. It's not that the supply isn't still increasing, but the rate at which it's increasing is going to slow. And so that's then again predicated on the other side of that equation, right, which is demand. We do need demand to pick up in that environment. If demand were to slow, but we're not seeing that. There's evidence that that's certainly not the case. But if demand were to slow, then that wouldn't matter as much. It's also tough to say, when you look at how this plays out over time, a couple years down the road, it doesn't really matter at the end of the day. But this is viewed as a bullish catalyst. And in the short term following the event, it has been bullish. It hasn't necessarily been bullish leading up to it, but following.
I would see how it can be viewed as bullish. I mean, obviously, because if you're going to, is there a number that with the reduction in pay for mining, is there a number at which mining becomes it's a loser? Like what's the number that
it doesn't pay the electricity bill?
Right. And what I know it used to be it was like 12 or 13, 14,000, but what is it if you're mining, if you're getting paid half of what you were getting paid? Like, at what point do you basically shut down the mines because you're doing it for a loss?
Because they're not paid to dig.
Yeah, like your price per barrel of oil where you're not going to drill anymore. I don't know off the top of my head. I can we'll have to take a look at that. But I
talked to miners before, and they were like, "Well, this is still profitable, but when Bitcoin gets down towards 14, 15,000, it's a very marginal business. At 27,000, there's still an arb there. You can pay your expenses, you can make some money, whatever it is. But if they cut the mining in half, I just think Bitcoin's, runs the risk of irrelevancy in the sense that it becomes real estate. And I just, I think like a trader, and I don't think my biggest complaint always with digital assets has been that the industry thinks like they're technologists. They don't think like traders. And therefore, there's a lot of the mechanisms in the digital asset world that don't, they didn't build it right. For it's not built for trading. So, but people think it's, they think it's tradable, but it's not really. So but I understand your points about supply and demand. We are definitely, you can make a strong argument that if you cut supply, demand's going to go up.
Sure, absolutely. And I think I agree with you. Bitcoin, I don't think the purpose, anyone, when it was created, it was set out to be something that's a trade, is extremely speculative, tradable asset. I don't think that was, the core
no,
reason, right?
Trading was secondary. It was just what happened inside of that ecosystem, but it had nothing to do, it was never the intent at all.
Right. But in DeFi, that's where you can have some fun. And I suppose that's not what we've gotten into the weeds too much here. We're working in that space quite a bit. I spend a lot of time on Bitcoin because it's what we offer through tastytrade right now, and it's obviously the biggest market cap coin. But I will show you soon some things in DeFi that aren't necessarily always accessible to U.S. investors, and I think that's what's unfortunate about a lot of this is, again, that the regulatory environment we're in, the political environment we're in. But if you want to trade, there's perpetual futures. You can lever those up 50x, or you can go 2x. You can customize your position, the derivatives that are growing in there. It's a really interesting and fun space if we're only focused on kind of the DeFi tokens, and then we can get into the NFTs and everything else. But I'll bring some of that to the table next time. A little bit more exciting in terms of the volatility.
Okay.
Cool. Well, buy as much Bitcoin as you can here, Tom. We've got about a year before these catalysts hit, and then it's off to the races. That's kind of the conclusion.
Very good.
I like it.
Thank you.
It's a bold statement. I like it.
We're going to take a quick 90-second break. Even the S&Ps are down 11, NASDAQ up 20, Dow down 147, and the Russell is down 21. Got a little bit of a mixed bag of tricks, a little more red than green. We'll be back in 90 seconds. We got more Tasty Live after this with a market measure on bonds. We'll be back in 90 seconds. Thanks, Ryan.
Hey, thank you, guys.
Thanks,
Okay.
Ryan.